Warren Buffett has warned stock market investors and crypto holders. When conflict breaks out, Warren Buffett has advised against selling stocks, accumulating cash, or purchasing gold or Bitcoin because he thinks that investing in businesses is the best way to amass wealth over time. The billionaire businessman and CEO of Berkshire Hathaway told CNBC that he would not sell any equities in response to Russia's invasion of Ukraine at the time. What has Buffett bet against? Watch this video till the end to know more. If stocks are cheaper, I'll be more likely to be buying them, he commented, rejoicing in the price decline of a stock he was aggressively purchasing. The investor continued, saying that he wouldn't sell even if the battle turned into a third world war or another Cold War. Well, if you tell me all of that is going to happen, I will still be buying the stock. He continued, you're going to invest your money in something over time. The one thing you could be quite sure of is, if we went into some very major war, the value of money would go down. I mean, that's happened in virtually every war that I'm aware of, Buffett continued. So the last thing you'd want to do is hold money during a war. Buffett, who has said he avoids doing business in Russia after running into problems there, emphasized that the U.S. stock market rose during World War II and had marched higher over time. American businesses are going to be worth more money, Buffett said. Dollars are going to be worth less, so that money won't buy you quite as much. But you're going to be a lot better off owning productive assets over the next 50 years than you will be owning pieces of paper, or I might throw in bitcoins, he added. Since 1929, every significant stock market disaster has involved leverage. Additionally, the number of U.S. investors utilizing leverage to boost profits has significantly increased since 2019. Utilizing financial derivatives or borrowing money to increase profits and losses from trading is known as leverage. Leverage has two sides, in my opinion, because it may be both beneficial and detrimental. In 2010, Buffett said, "If you don't have leverage, you don't get in trouble. That's the only way a smart person can go broke." And I've always said, if you're smart, you don't need it, and if you're dumb, you shouldn't be using it. Buffett issued this caution in a letter to Berkshire Hathaway investors in 2000, during the height of the dot-com boom. A pin lies in wait for every bubble. And when the two eventually meet, a new wave of investors learns some very old lessons. These lessons were that Wall Street will sell investors anything they will buy. Second, speculation is most dangerous when it looks easiest. Warren Buffett is a leading authority on investment psychology and the human condition with 80 years of investing experience. Buffett provided testimony in this investigation interview on March 28, 2010. We will have other bubbles in the future. I mean, there's no question about it. Betting on America. In the spring of 1942, when the U.S. was suffering greatly from World War II, Buffett purchased his first shares at the age of 11, he recounted in his shareholder letter for 2018. 3 shares of Citi Service were exchanged for his $115 in savings. He claimed that if he had put that money in a no-fee S&P 500 index fund and reinvested all the dividends, it would have been worth $607,000 by 2019, a gain of 5,288 times. In contrast, he said, if he had panicked and bought $115 worth of gold, its value would have grown to only $4,200. All you had to do was figure that America was going to do well over time, that we would overcome the current difficulties, he said at Berkshire's annual shareholder meeting about investing in an index fund in 1942. You didn't have to pick out winning stocks, he continued. You didn't have to pick out a winning time or anything of the sort. You just had to make one investment decision in your life. At the Berkshire 2020 gathering, Buffett reaffirmed his confidence in the long-term prospects for the United States. I was convinced of this in World War II. I was convinced of it during the Cuban Missile Crisis, 9/11, the financial crisis, that nothing can stop America, he said, adding, we faced tougher problems, and the American miracle, the American magic, has always prevailed, and it will do so again. Buffett conceded that the U.S. experienced setbacks like the Civil War, the Great Depression, and the COVID-19 pandemic, but insisted that the nation always emerges victorious. Never bet against America. According to Buffett, the Federal Reserve's policies and the stimulus measures approved by Congress have done a great job of supporting the economy and preserving low interest rates. He claimed that while the government undoubtedly learned from the Great Recession in 2009 and responded rapidly to the outbreak, it is difficult to foresee the long-term effects of those actions. This economy right now, 85% of it is running in a super high gear, and you're seeing some inflation and all that. It has responded in an incredible way, Buffett said. According to the Bloomberg Billionaires Index, Buffett is the richest investor in the world, with a fortune estimated to be worth $104 billion. His holding firm, Berkshire Hathaway, has investments in a variety of companies, including the software giant Apple, railroad companies, battery manufacturer Duracell, and the ice cream fast food franchise Dairy Queen. Wall Street makes money one way or another, catching the crumbs that fall off the table of capitalism, Buffett said. They don't make money unless people do things, and they get a piece of them. They make a lot more money when people are gambling than when they are investing. Buffett bemoaned that large American companies have become poker chips for market speculation. He cited soaring use of call options, saying that brokers make more money from these bets than simple investing. During the epidemic, retail traders flocked to the stock market, pushing share values to all-time highs. Last year, trading meme-inspired items from Reddit message boards added gasoline to the frenzy. However, this year's stock market downturn has left many of those new at-home traders in the red. In the past, Warren Buffett has criticized investment bankers and their organizations, claiming that they promote mergers and spin-offs in order to earn fees rather than help businesses. He typically shuns investment bankers for his acquisitions, calling them pricey money shufflers. That's it for today. If you enjoyed the video, give it a thumbs up. Also subscribe to the channel and hit on the notification bell so you are updated whenever we post a video.